All right, the Fed makes its first rate cut in a year. TikTok's US future hangs on a bit of a high stakes deal, and a Warner Brothers Discovery Paramount merger could reshape sports and streaming in the US and globally. I'm Kate Scott Dawkins here in New York with my co host Jeff Foster, and each week we break down the latest economic news, media moves, and industry trends from the world's biggest buyers and sellers of advertising and explain what they mean for brands. And we have to start with the US Federal Reserve this week for obvious reasons. Quarter point cut as expected. It was mainly priced into the stock market, but if we do, in fact, get another two cuts before the end of the year, which is, I think, sort of where the market is leaning, that will end up rippling through the economy and the ad market. So, Jeff, let's talk through what we learned this week.
Yeah, so of course the big news on the economic side was from the Fed. So the new rate is now 4% to 4.25%. So as you mentioned, that was a quarter point decrease, and two more rate cuts are expected this year. Yeah, I don't think it's really too big of a surprise. The market seemed to have had this priced in. It was kind of met with a shrug, I guess would be the best way to describe it.
Of course, everyone hangs on what's called the dot plot from the Federal Reserve, which is in all the individual governors talking about what their expectations are for the rest of the year. Anything else we learned looking at that?
Yeah, so the dot plot, I guess, which would be probably the most simple way to explain it for those who aren't familiar, is just like a giant scatter plot type of chart where you, as an anonymous survey for members of the Fed, and they put where they think the rates will be in the next few years. So by looking at that, it looks like that there'll probably be another reduction in 2027 as we get towards the long run neutral rate of 3%. So I mean, it was interesting. They publish this chart every 3 months, so it's the first insights we've seen for a little bit. Kind of gives you a thought of like where the Fed is thinking this is all going.
Well, and a 3% neutral rate is higher, namely, than a 2% neutral rate, which
Yeah.
is the Fed's target for inflation. And people have been saying, I guess, some market watchers have been saying for a while that neutral should be higher than 2, given where we are. Looks like that's at least the near term idea from the Fed as well.
Yeah, and there's always the devil's in the details with a lot of these things. And listening to Powell's remarks, it definitely to me seemed, yeah, I guess slightly pessimistic. Would that maybe be the best way to describe it? There's a lot of talk about elevated uncertainty. I think he specifically said that the unemployment rate edged up, remains low, and downside risks to employment have risen. So kind of Fed speak for saying, yeah, we're keeping an eye on the job market. Like, we're not super comfortable with where it is.
Yeah, well, and inflation too,
Right.
right? Still higher than they would like. You're following headlines this week. There were all sorts of other ideas and topics around, potentially how much immigration is impacting the unemployment rate in the US as well. And as the Fed often says, they're going to need more data. So they have another month or two of data before they have to make another decision there then.
Exactly. So, I mean, I think we're definitely geared up for two more cuts to end the year, and I think, yeah, then we'll see how the tariffs and the inflation situation impacts Q4.
Yeah. Well, that wasn't the only economic news out recently. The U.S. Census Bureau released their U.S. income survey data. A couple of points there. Some, not much change over the last couple of years. This is looking at income estimates based on the concept of money income, not accounting for the value of in-kind transfers. Median household income for 2024 was 83,730. Not statistically different from the 2023 value, where you do see some changes. Median income increased by 5.1% for Asian households and 5.5% for Hispanic households, while it declined by 3.3% for Black households, according again to this U.S. Census Bureau data, and then did not change significantly for white or white non-Hispanic households. It's, again, looking at any government data we can just to sort of keep an eye on what's going on in the overall market. This comes alongside news from Moody's that the share of consumer spending coming from the top 10% of households ticked up even more since the last time they released that data point, just a few months ago, Jeff.
Yeah, I think we're reading a lot of stories that have similar themes about kind of two economies of the rich and everyone else. And, it makes you think, especially from a marketing and advertising perspective on, how do you kind of handle two sort of different economies? How do you keep your messaging strong for people to come back to buy certain goods? And then you might have other goods that seem to be doing pretty well in services, like such as travel, which seems to be holding up pretty well. There's been a lot of data and reports about how flights, especially international flights from the US, are fully booked and travel has been pretty hot. So you have that part of the economy. Then you might have something where people might start thinking cutting back, whether it's in food, CPG, that sort of area. So I think it raises some interesting challenges for marketing.
Well, you mentioned CPG. I think this is exactly why we've seen, CPG earnings calls in the last several months talk about both sides of the equation. They've been talking about premiumization and ways in which they can market products and market innovation that allow them to sell these higher value or premium goods at the same time as they're also talking about value size packs or price pack architecture in terms of getting those shoppers who are maybe cutting down on the size that they're buying, or maybe trying to convince them again not to go to a store brand but
Mhm.
continue buying the name brand. And so you really are hearing both of those dialogues in these earnings calls at the CPG level, just as one example.
Yeah, exactly. I just thinking from having a creative hat on, it's interesting. How do you market this? You're sort of marketing value at the same time, brand awareness. So it's an interesting position for advertisers. I'm trying to remember the last time we saw something with fairly two distinct markets, and it's probably been a while.
Well, you mentioned that. It's a bit of a segue into the other piece of the income data that came out from the US, which is the female to male earnings ratio, which went in the wrong direction. Speaking, I guess, personally, for full time year round workers, the female to male earnings ratio in 2024 fell to 80.9%, excuse me, from 82.7% in 2023. So that gap between male earnings and female earnings actually increasing over the last year. So again, there's plenty of data to look at, but increasingly appearing as though we are seeing divergences in how different consumers are experiencing the US economy right now.
Yeah, exactly. And that's an important one to keep an eye on.
All right. Well, speaking of shifting and the economy and platforms, of course, let's talk TikTok. That was also big in the news this week, especially as it relates to the US. TikTok's on track for about $13 billion in US ad revenue this year by our estimates, but its future has been up in the air for most of the year, really. The ban that was signed before President Trump took office, that deadline has been pushed back again. There is a deal supposedly on the table, but plenty of details still remain to be finalized. So another another extension to December. No news. News is no news. I don't know how to portray that really.
Yeah, I've lost track of how many extensions at this point. It almost seems like an SNL sketch, just more extensions after extensions. But this feels a little bit more real that I think we're edging towards some sort of conclusion on this. At least that's the vibe I'm getting and with all the speculation floating out there. But we'll see. What are you thinking?
Maybe. I mean, it
Yeah.
still needs approval from the Chinese
Yeah.
government. And to my mind, there's not a lot of incentive for them to close the deal on anything if they can keep kicking the can down the road. So I'm not sure I'm convinced that this is put to bed. But I mean, I think advertisers and ByteDance or TikTok would like to have that resolved. I mean, we do believe the US is their largest market by quite some distance, even though the ex US share has been growing over the last few years and they've been putting more attention into that as this uncertainty in the US hangs over that market as well. But let's talk a little bit about what could happen potentially or is rumored to be happening.
Yeah, I mean, I think the big question is the algorithm too, surrounding that, how that would work out. Of course, there's no details on that one, but I think that's sort of the big piece in this whole puzzle.
Yeah, well, the most recent reporting, and again, nothing's finalized, but the idea is that the algorithm would be licensed to a new US entity that is 80% controlled by a group of US entities and investors. To me, I don't know that that answers the letter of the law in the ban that was passed, but I think there's in this current environment a lot up for definition and debate in the current administration. So it may still go through, but certainly where the algorithm sits, who owns it, how different is it from the global algorithm? How much does US content still get seen overseas and vice versa? Those are all questions that advertisers are going to be looking for answers on, really, ahead
Yeah.
of any future investment decisions.
Yeah, there's a million questions that I think we all have, and it's also interesting to see if will other platforms try to capitalize on this, with advertisers and try to make themselves be a little bit more, I guess, would the word be stable or a little bit more predictable? Is that something that they would take and starting aggressively marketing themselves more towards advertisers to capture some of those dollars, or do you think things just sort of remain status quo?
I mean, like a pot of low double digit billions of dollars is is very attractive.
Exactly right.
There aren't a lot of exactly comparable platforms or offerings and scale where that can go, I suppose, but it won't be doesn't mean that there won't be a lack of trying for sure.
Yeah, right. That would be my guess.
All right. Well, TikTok is figuring out its next chapter, and this may actually end up being more related than we know. But the TV world is also about to get a bit of a plot twist of its own. We had just finished recording our podcast last week when news just came out that Paramount was preparing a bid for Warner Brothers Discovery ahead of the planned split that Zaslav has been talking about.
Yeah, so this would be a pretty big one. It was when we were doing the analysis and looking at our data. So if this goes through, and we stress this is a big if, there's lots of uncertainty, may or may not happen, but it's always fun to play along. And if it did happen, according to our data, combined advertising revenue for this new company would be 18.4 billion, which would make it the largest legacy media player. Would be well ahead of Comcast, which we have at 14.1, at Disney at 11.7, at Fox at 6 billion. Again, we're looking at our data in terms of 2024 numbers. This combined entity would be the 8th largest global seller of advertising, just behind Microsoft, and representing 2% of global ad revenue and 11% of global TV revenue. So, I mean, this is when you start looking at these numbers, when we were doing our analysis on this, I mean, the numbers are pretty impressive what it would look like.
Yeah, and I think there's a lot that we've talked about over the years in terms of the benefit of scale, especially to legacy players. I think looking at this alongside the Media for Europe bid for more ProSiebenSat.1 and combining more of that into a regional player makes a lot of sense. It gives them a lot more consolidated sports rights portfolio, and we know Paramount just bid on the UFC rights, so this now would bring a bunch of additional sports into the mix, giving them control or influence at least over nearly all major US sports other than the NBA and Olympics. And the SEC in Europe, they would have, we talked about Channel 5 starting to offer the NFL in the UK. Warner Brothers has historically had Olympics rights across Europe. So it's a big sports portfolio
Yeah.
and a big content budget as well as part of that.
Yeah. I mean, and also just looking at the sports for a second, almost, it puts them in close to scale in the ESPN level terms and Disney terms. So it would, could create a pretty bona fide rival. Yeah, as you mentioned, looking on this streaming side, of course, if you combine the two streaming services with HBO Max and Paramount Plus, be looking at let's see, HBO Max would have 125 0.7 million global subs, Paramount at 77.7 million as of 2Q. So combined, you're looking at over 200 million global subs. Of course, Netflix no longer reports, but at the end of 2024, they had a little over 300 million global. So, it gets you close. I mean, that's, there's a lot of what ifs if all subscribers stay and of course content output remains the same, but
Yeah, no, of course. Well, there are so many questions
yeah.
as to whether Zaslav even likes this deal, if it means he's no longer in charge of the movie studios, which I think has been a very attractive piece of this for him, right? It's obvious that he took the HBO and studios business after the split and not the
Yep.
networks business, right?
Yes.
Walking away from that would be a big question, I think, for people who watch this industry.
Yeah, yep, exactly. And as you mentioned, for combined content spend, we'd be looking at this new company would be at in 2024 $28.5 billion in content spending.
Yeah, and we obviously keep a record of content spend across all these players. Some of them report, some were estimating or building up numbers mostly on amortized costs, and that would definitely make them the largest global player ahead of Comcast even, and ahead of YouTube, where we had new data from them this week too. $100 billion paid to creators, media companies, and music royalties, music studios since 2021.
Yeah, it's a huge number. So, kind of puts in perspective. It's interesting that number, coincidentally came out around the same time as this proposed merger. So it kind of helps, frame the size of what this new company can be, and also puts into size the actual scope of YouTube's content spending, which is just, it's enormous.
Yeah, so if we look at 2025, that would basically put them on pace to surpass 30 billion in
Yeah.
content costs for 2025, including what they pay in terms of carriage fees for YouTube TV, their virtual MVPD, but including all of the music costs according to our data.
Yeah, so it would definitely be an interesting, uncharted territory, I guess, for advertisers when you're looking ahead, looking at the size of YouTube. Again, if this new company takes place, I guess, if you're an advertiser, I don't know if more options is the right word, but does it give you more confidence in platforms that these companies would have under their control to, maybe do better targeting, better reaching of certain audiences?
It's a good
Or is it,
question.
or does it squeeze the market and give them more, more leverage?
Yeah, well, according to some guideline data, our data, certainly they would control more than 20% probably of US TV ad revenue. So for buyers of advertising, we would typically say more players is better, more competition. But when you're also competing against players in terms of overall advertising spend that include companies like Google and Meta, it's possible that actually having a few larger scaled platforms in the legacy space could benefit maybe if
Yeah.
they're able to consolidate that focus on the tech and targeting, not having to compete with each other potentially in the market. Again, we've been talking about how scale is definitely going to help the competition again between, legacy players and these big digital players. So maybe it ends up being a benefit in that sense.
Yeah, exactly. Because, it's interesting just looking at what this company could be. In theory, could offer a nice amount of services and products for advertisers from, small, medium sized businesses at a local level, all the way up to the, top of the funnel of a major sports event such as the NCAA tournament, all under one roof, which would be, I think, an interesting proposition for most advertisers.
Well, let's flip it on its head, though. Put your broadcaster hat on for
Sure.
Fox or ABC or NBC. Then you're viewing this as what?
Yeah, and then you're viewing this as, well, let's see, where's my place in the market? Do I need to scale up? Do I need to start looking at M&A? If this goes through, how do I match the offerings, or do I take a different value prop that, you're going to get a different level or different quality of service through buying ads with us, or a different type of tech capabilities? But I think all roads are sort of leading to better tech targeting, better capabilities, better reaching audiences, as we said, that whether it's at the top of the funnel or a little bit, more towards the bottom, or you're looking at local type of opportunities for small and medium-sized businesses. I think, if you're a legacy media company, I think this is really turning into an inflection point where you got to, take a close look at your business and figure out where you want to be.
Yeah, we were talking about this a little bit earlier this week too, just on the Super Bowl. Every once in a
Yep.
while, this would, I mean, again, say they do combine. It's not guaranteed at any
Right.
rate, but it would allow, say, maybe Harry Potter advertising during the Super Bowl. If we're looking at what they've done for films like Barbie in the past of advertising on their owned and operated channels, but then they may, Paramount may only get the Super Bowl once every 5 or 6 years instead
Yeah.
of every 3 or whatever it is now.
3 years, yeah, 3 or 4 years. And then, it gets interesting with the news coming out that Amazon does win a Super Bowl. I'm sure that Netflix would love a Super Bowl. I'm sure Apple would probably love the Super Bowl. So at one point, if you're a media company, you go from getting a Super Bowl every 3 years to every 4 years to, who knows, maybe you're getting it once every 4, 5, 6 years now. And when you look at the oversized impact of a Super Bowl, roughly, including pre-game, post-game, you're looking at what, 800-ish. You'll be close to $1 billion day soon. So it's yeah, it's again, it's something you'd have to think about and how that's going to impact the legacy media companies.
Yeah, it is astounding as a single day event. We've done some analysis on global advertising revenue for sporting events, and obviously the top one is Olympics, and particularly Summer Olympics. That's the biggest, and the majority of that is coming from the US. Then you have World Cup, which is going to be a massive one next year. We're already hearing about all the advertisers within that
Hmm.
space and how big that's going to be. And then, right up there at the top is the Super Bowl. And that's a 1 day,
When
several hours event rather than
Yeah.
20 days or whatever it is, 2 weeks for some of these other events. So it does have a big outsized impact on the media owner that year. And also on the market in total, which we then end up either having to include or exclude depending on how spiky we want the data to be.
Right, right. I know as we make up our charts, we can definitely see the impact of those sporting events on our charts.
And so for advertisers, I mean, it again, they're the ones that were going to buy Super Bowl. They're going to buy pretty much, I mean, regardless of who has it that year, right? And then we've already talked, I think, a little bit about the impact of consolidation for them. But again, looking at competition more broadly than just legacy video players in this case.
Yeah.
All right, since we're here in New York, well, since I'm here in New York, you're always here. There were a bunch of events this week happening. I spoke at Moffett-Nathanson's Advertising Day. Axios is having a media trends event here. Smartly had an event. But let's switch gears and talk about some of the buzz on the ground right now, which is really tied to AI. Right? Everyone wants to know who has it, how are they using it, what are we seeing, and there was actually some good new data out on that this week. Both Anthropic and OpenAI, or some researchers tied to using OpenAI data and ChatGPT data, released AI penetration and usage information, which has been really fascinating to pour through.
Yeah, definitely. I mean, it was a fun read, and I think some of the things that pop out would, when you see how the usage, especially in the U.S. and on a global level too, is tied to economic trends on each state here in the U.S., which is funny because it's, what, I hate to say it was kind of on brand. Lots of usage in New York on finance, California coding, D.C. research, Hawaii tourism. You had a lot of searches and requests in those areas, so it kind of makes it all local and kind of fun to see that data, from that standpoint. And also, putting your marketing advertising hat on, just looking at this treasure trove of information, knowing where the requests are coming from and what type of industries or what type of requests and use cases are coming in, makes you really think on how this could be used or, in the not so far away future for advertising and targeting capabilities.
Yeah, and we'll put a link to the interactive website from Anthropic in the show notes. There were a few other takeaways for me reading through this. I mentioned that the countries that use Claude most often generally also have robust internet connectivity, not surprising, as well as economies oriented around knowledge work rather than manufacturing. There's definitely a lot of usage in the both work and personal examples. Perhaps surprisingly, though, in countries with higher Claude use per capita, the uses tended towards augmentation. So using AI more to help or in an iterative fashion working back and forth. Whereas people in lower use countries are much more likely to prefer automation, where they just direct it to complete a task. And then Claude completes that task. So there are all the sorts of these little hidden gems throughout the data that are really interesting to pick apart.
Yeah, exactly. I was thinking it just from a Freakonomics standpoint, it was kind of fun as well, seeing that the U.S. was over-indexed with lifestyle requests like cooking, nutrition, and meal planning, versus a country like India where more technical requests were over-indexed, like fix and improve web and mobile applications, UI layout, styling, and components.
The meal
Just
planning struggle is real,
it
Jeff.
is.
It's the least favorite part of my week.
Exactly, but I guess maybe we would all be better off thinking about UI layouts and experiences. Maybe asking that to AI rather than meal planning. But who knows? But you're right, meal planning is difficult. So I guess AI is finding its place for that.
I'm waiting for my robotic chef who just does all of the meal planning, shopping, cooking, cleaning up. That would make me very happy. So eventually we'll get there.
Well, we're getting there.
There was also the OpenAI report, which said that by July of 2025, 10% of the world's population had, quote, adopted ChatGPT. They didn't define that in that sentence. I'm sure there are some other definitions throughout the rest of the report. 18 billion messages were being sent each week by 700 million users at that cutoff date. So we've seen this scale very, very quickly, especially in comparison to other sort of technology-based, hardware-based technology adoptions, obviously. So this going very, very quickly in the span of just a few years. A few other interesting notes for me. Gender usage has become much less male-dominated. It was highly what they termed, typically male first names in the early days of ChatGPT, and that has now come down to about parity. And non-work usage has grown from 53% to more than 70% of all usage. So very much in that same vein of the sort of lifestyle type asks and questions. OpenAI is saying the same thing.
It's almost feel like, anecdotally, at least people using it sort of like a quasi answer, a search engine type of thing is just becoming more and more second nature. And this data kind of backs up what we're probably seeing amongst friends and family.
The age gap, I think, though, is still there. So
Yeah.
the paper said that we find that nearly half of all messages sent by adults were sent by users under the age of 26. Quote, although age gaps have narrowed somewhat in recent months.
Yeah, that was an interesting one. And then one that really struck me, having our marketing advertising hat on, was that the data point purchasable product requests made up only 2.1% of all requests, which I thought was kind of interesting. It's again, we're still in the early ages, but I guess people don't seem to really be asking ChatGPT for product recommendations too much.
Not too much. It wasn't
Yeah,
that long ago that they really rolled that
right.
out as a major sort of offering or use case or user experience. So I would expect that to continue growing.
Yeah, I would say I'm probably with near certainty that number will go up.
Yeah, there's again good data there, I think, for anyone else looking. I think when we're thinking about how we are likely to see growth throughout the end of this year and into next year, I do think we are starting to see that upside potential scenario we talked about at the end of the June forecast, which is this concept of companies built on AI or selling AI products and services, some of them built off the back of these major models like ChatGPT and Claude from Anthropic, that the time to spend is now while the
Yeah.
usage is growing and
Yeah.
while they're trying to build in those brand allegiances. And that may be contributing somewhat to sort of healthier growth in advertising revenue than what we might expect if we were looking solely at sort of economic factors.
Yeah. No, I agree 100%.
Hard to quantify all of that because some of the companies are still private. That was another sort of piece of data we were looking at this week around the topic of whether the US should move to a half yearly reporting schedule versus quarterly. There's been a lot of back and forth on LinkedIn and message boards about that too. Personally, as someone who, yes, sits through a bunch of quarterly earnings calls every year, we do rely on the cadence of that data. And it is very useful for us to be able to create less volatile and more credible forecasts, which is fantastic. I do understand the point of maybe making it more attractive for companies to go public earlier. There are a lot of companies that have been established for quite a long time that are not public yet and probably sitting on substantial amounts of advertising data that we could then get access to. We put together a bit of a list this week, actually. Jeff, should we talk through some of the companies in that list and sort of what we're looking at in terms of recent IPOs and the revenue tied to those, as well as some of the IPOs that may still be coming and maybe would come sooner potentially if the reporting requirements were at least less onerous, if not less frequent.
Yeah, it was a fun exercise to put together. Of course, we just had what the Klarna IPO was a fairly recent one, so that got us thinking again once in this model, and then looking at some of the larger companies. What do we have? I think SpaceX was on there as well, just for fun to take a look at, and a bunch of the other big tech companies that are still yet to go public.
So amongst the recent sort of 2025 IPOs, you have Klarna, Figma, not a new company by any means, but Nielsen IQ, Circle, Mountain, Newsmax Media actually this year, Chime and CoreWeave, which by our estimates, some disclose, some don't, is over $1 billion in 2024 advertising expense. Not necessarily media spend, but advertising expense, which we now can track and have eyeballs on. And that, was what about worked out to 9.9% advertising
Yeah.
expense as a percent of revenue for this group. So still hotter, higher than what we would expect
Hmm.
of, mid-traditional incumbent category.
Established. Yeah.
Yeah. But when we look at some of the companies that are yet to go public, companies like OpenAI, Anthropic, Perplexity, Stripe, Databricks, you mentioned SpaceX, Discord,
Canva.
Canva, Shein, ByteDance.
Yeah.
That's the big one, really. There's upwards of $200 billion
Yeah.
in revenue across those companies. And if we include ByteDance, that's what, maybe more than
Oh,
$10
yeah.
billion in advertising expense. Even if we don't, maybe close to five, 3.5 to five. So, yeah, it's a good number that we'd like to get eyeballs on.
Yeah, and tangentially related, it's interesting that how many of these companies also sell ads as well.
That's true. Yeah. We were talking about our TikTok estimates. Of course, they are still estimates.
Exactly. Looking at our list, Fanatics also is an ad seller as well. So it'd be interesting to get more insight into that data too. And then, of course, a probably more selfish reason for us looking at the U.S. market, we finally are getting insights on Newsmax after they went public. So we have a new company to add to our composite. But it was a really fun exercise looking at the data and how we can incorporate it into our model.
I feel like singing that Moana song, You're Welcome. All right. Well, before we wrap up, one plug for the week ahead. I guess won't be public, but I'm excited to touch base with our office in Japan, WPP office in Japan. Former colleague Kyoko Matsushita, who runs the WPP Japan office there. We're going to sit down and have a fireside talk about what we see for the advertising industry. Talk about some of those 2030 survey results that we discussed the last couple of weeks. So fascinating there. Anytime we're looking at the fourth largest advertising market and sort of crossroads as they transition to more streaming TV from a very traditionally dominated TV market, and also headlines related to everything from EVs to robotics in Japan. So excited for that conversation. How about you, Jeff? Anything for next week?
That should be a cool one. Next week, of course, we're in an awesome sports phase. And then looking from the economic point of view, I think we have an inflation report, and I believe we have a consumer sentiment report due out in the next couple weeks. So those would be some ones to keep an eye on and get a better sense of what we're looking at as we gear up for Q4.
All right. Well, thanks for listening to the WPP Media Intelligence Podcast. Don't forget to subscribe. And if you have any questions for the show, you can email us at business.intelligence@wppmedia.com. As a reminder, the Media Intelligence Podcast from WPP Media is meant for informational and entertainment purposes only and should not be considered financial advice.